Hi folks, this is Anne Marie and this is the extended SPY report. It's pretty important that I open up the gold swings here. I want you to see a little bit of what's going on. And I'm going to leave it on the 15-minute for a little while. Anyway, let's pull that one up so we can look at the different triggers. We actually have triggered in a number of spaces short. Okay, and so the ES as we sit right this moment is a little bit up. I think we're in a little bit of a bounce zone, but let me get these pivot actions here. Let's look at it on a 4-hour chart first. We got our pivots. This is our monthly pivot. This is our weekly pivot, and that is our daily pivot. So let's bring it into an hourly chart so we can look a little bit. Now, SPY says short below 167.95, or the aggressive entry is the rejection of 168.95. Certainly, both of these work very, very nicely. Rejection of the 168.97, aggressive entry worked very well. With the aggressive entry, it's very, very important that you look at what's closest in terms of the weekly pivot, whether it's a support level, something like that, to estimate what your stop should be. In the end, the initial hard stop is the same thing. Right? So getting the aggressive entry is sometimes a very, very nice thing to try here. Would have worked beautifully. If not, notice 167.95 never got printed. It's right in here because we gapped down. Look at what we gapped down into, the first target, right? Trading rules say, hey, listen, if I have a massive gap down, I need to wait 15 minutes minimum, 15 minutes of figuring out what's going on. In the first 15 minutes of trading, if a chart does not try to recover the gap, it probably will move downward. That's a very high probability if it does not begin to recover. Okay? When a chart gaps like this and we decide to take the short underneath the first target, our stop immediately becomes the opening of the gap, or just a couple of pennies above it. Okay? That's what you do, because the second we get into a gap, we have a tendency to fill at least 50% of it. And that would have taken us all the way up into 168, 20-ish, 168.30, something like that. Okay? So, that being said, we would have entered somewhere around 167.20. Let's see what that number is. At 167.15 would be the open of the next candlestick. Not touching the first 15 minutes to see what's happening is called the 15-minute rule. Okay? And so if you had taken the short there, you would look here and you go, okay, here's my first target. My stop is pretty tight. It's just a couple of pennies above the gap. And so I could move into this target, and then all of a sudden, here I am at 165.50. The target there was 165.48. Now, if you see your chart coming in, and it's not essentially making lower highs or lower lows, and your SMI is very flat, this thing is going to bounce. And so I may have missed it by a couple of pennies, but if you're watching the stock, it's a place where you can go, you know what, I can take some profit. If you're not watching the stock, then here's my suggestion. When I put in a setup like this, and I get into my first target, I move, when I get past my first target, I move the stop into break even. The rules are different here because of the gap. Instead, in the special case of the gap, because it's treated differently, I must move the stop to just above wherever the gap is. It happens to be right at the target space for the initial target. But when it gets into this space, take a little profit. Bring your stop in. When it gets down into this space, bring that stop into the 166.58. All right? I'm giving you enough room that if you bring it into this stop, you ought to be in pretty good shape. If the chart fails, right? Clearly we see the 50 is now at 166.31. Ultimately, you should be at least half size, not full size in this position, but half size, as I believe I'm going to actually shift this number up and make it 164.98 for your next target if it does come in there. Right? And I'm also going to shift that one up to 165.50. All right? If indeed we do bounce, your stop should make you money irrespective of that. Okay? So that's how the SPY went. Let's take a look at how the IWM went. That also triggered a shorting action. Let me move this over a little bit, excuse me, so we can see what's going on. All right, here's the short setup for the IWM. It also dropped off. The aggressive entry was the loss of 103.85. That would have happened here on August the 12th or so. And it would have popped right back up into your resistance area, which is 104.38, right? And so this trade would have been stopped out. And as a matter of fact, I did get stopped out here. Just because you get stopped out does not mean the setup is wrong, okay? It does not mean that the setup is wrong. The aggressive entry, 103.85. The regular entry, 102.94. If you'd taken the aggressive entry, would have stopped you out. Okay? An aggressive entry means that we are taking a chance of getting stopped out sooner. Now, what we have a tendency to do is go, I'm just not going to take that trade. But see, it's still a good trade, and so you look for the next setup, which says below 102.94. Well, let's take a look at this one, and let's see the 1 hour chart. And as we can see, here, let's bring this back into view, 102.94 is just about the high of this region. Okay, so now we open up into the gap. If we had waited for the 15-minute rule and watched it enter the gap and then reject, after the first 15 minutes, we know we can take it short, right? Where would the stop be? It would not be at 104.38 anymore. It would be a few pennies above the top of the gap, because if we enter the gap, we will try to traverse 50% of it, which is right around here. Okay, so that's where we would have our stop, and lo and behold, it went down into 101.55. I have 101.40, right? So chances are the charts are going to extend some more. But again, we have the first target, this 103.38 target, actually did get hit. Very interesting. But it would not have hit in the right way for us to get that. You would have had to have been really, really slick to have taken that short the way it was. So that being said, here we are. 101.55 is where this came into. The next step is going to be 101.31 if indeed it goes there, right? Now the 50% rule is showing us as having bounce action. The IWM is not printing, but there's a likelihood of bounce action occurring here, folks. We are near the end of this initial move. Now whether we bounce into resistance and roll right over again remains to be seen, but at this juncture, I do believe bounce action is on the horizon. The second we lose our lows, however, they are not going to be. But our stops, we should have taken profit at these areas. Listen, you know what I do, folks? I do conditional orders. And I say when the stock gets to 102.67, I'm going to take a little profit. When it gets to 102.08, I'm going to take a little profit, right? When it gets to 101.40, that's the old one, I'm going to take some profit. Okay? So you keep moving your stop down. Again, once it leaves the region, right, means at less than 102, you can move the stop into 102.67. Remember, the hard stop changes with a gap, because we're looking at the inside of the gap making a difference. That's why gap action is very, very special, right? It's a study unto itself. Okay, so the September 104 monthlies also doing extremely well. And for the SPY, the 170 monthly is also doing very, very nicely. Let's take a look at what happened with the Qs. So what should we be doing here from this perspective? Our stop needs to be above, I don't know, I'd say 102.08, 102.12. If we're trying to take as much profit as we can, if we want to leave some of it to jockey around, 102.45 should be the widest stop you have right now, because if it breaches that, it's going to come up here more than likely. All right, so that's it right there. Now, if we take a look at the Qs did not behave as nicely in terms of rotation. Gave us quite a bit more trouble, actually. So let's see how this particular swing is going. I have below 75.86. It started at 75.96 with the gap. All right. So your job, if it does not fall into your trigger, as soon as it loses 75.96, you can take this trade. But again, where is your stop? Because this is a gap event, your stop is going to be just a few pennies above. It's not going to be all the way up here at 76.92, right? So if it drops down and it opens up and then comes into your price trigger, you can take the trade exactly when it happens. All right? Because the gap is not filling, it continues to move, and you have an incredibly tight stop here, right? Very low risk threshold. If I've got 76.08 as my stop, and I'm getting in at 75.86, it's very, very nice. Now, what is my first target? 75.70. My second target is 75.39. It came into 75.30 at the second test. So it came into this target, came into this target. Folks, when things come into target, you're supposed to take profit. When it comes into the first target, you take profit, move your stop to break even, right? You'd move your stop to break even here because it's so close. You'd have the option to moving it just above the top of the gap to give yourself a little bit of room. And then it went down into the second target. Okay? If it bounces just so long as it does not breach the top of the gap, you're in good shape. Okay? The second it breaches the top of the gap, you should either be cutting and running or getting yourself down into very, very small size. I would close the trade out myself and just re-enter at the new loss, right? So here it is. It lost the level. If you said to yourself, hey, listen, I'm going to see if it gets into the next gap. I know it's going to bounce. If it bounces into a lower high, I should get a lower low. But what does it do? It comes right back into the 75.39 and does not leave it. When this tests the second time, you should be leaving part more of your position. All right? It comes in again, bounces into another lower high. If it comes back in and gets to the target, 75.39, you should move more of your profit off. All right, that's how you manage these trades. Now, let's say you're working or you don't stare at the SPY all day long. How do you do it? You take a percentage of the holding off. All right, and you leave it there. Now, for here, you should go to half size at this target, and then you're going to have to wait. If you're not staring it down, you're going to have to wait to see how this resolves. But if you are staring it down and you see it hit 75.39 once, twice, thrice, guess what? This area is being defended. The longer it gets defended, the higher the likelihood that it's going to pop. Okay? So you should be down to quarter size here. If you're swinging, you don't stare at it all day, you should be at least half size. Okay? All right. That's it for that. I am not really changing any of these numbers. I think this one needs to shift to 74.88. I think I still like 75.03 as the target for that. And then I believe I still like 74.26. All right, but all of those are still short. You should not be full size in this position. Set a conditional trade to exit. When it hits this price, I need to exit. All right, if you don't have a system that does that, I'd recommend finding one. All right, your trading platform should give you the ability to have conditional orders. All right, that's it. There'll be another SPY for the intraday levels coming, but I definitely wanted you to have this to understand a little bit. A lot of us have been upgraded from bronze to SPY, and I want to make sure that you are getting the best that you can out of this particular position, right? Because other than that, you're not going to be using it properly, and you're not going to understand how to make money. All right, so that's it. Hope it helps. See you all tomorrow.